I have adjusted my Zig Zag indicator once again to be relative value. You see the input here. We're dividing by 300. Why are we using 300 for this count? Is 15,000 divided by 300 is 50. And so at this current level, we're using 50 points. So if we go back in time, we take the closing value. We're actually using the closing value of the $indx.x. You can see here close of data 2 divided by 300. So we're taking the cash value of the NASDAQ 100 closing price of the previous day and dividing it by 300, basically 1/3 of 1%. How many turns per day are 1/3 of 1%? And so let's look at the relative value Zig Zag indicator and where it ranks. And then we're going to compare it to the VIX. So pandemic was higher, relative value speaking. Point value, this was higher, 75 turning points. During the pandemic, based on the current 1/3 of 1% turning points, based on the cash value of the NASDAQ 100, there's 131 on March the 18th. And then back here on August the 10th, 2011, there was 78. During the flash crash, there was 73. And there was 75 on January the 24th. So let's look at another setup for this as well. I want to divide by VIX because I think that normalizes it even more, and I'm going to show you that. Now in this one I divided by the VIX, and why did I do that? If you look at this is without the VIX. Now the VIX was high during the pandemic. So for example, the market during the pandemic, you see 131 reading, VIX was up over 80. Now during this most recent spike, the VIX only got up to around 36. And so how does that compare? Normalizing it, relative value Zig Zag indicator, 1/3 of 1% moves, divided by the VIX, the closing value of the previous day, 2.6 on January the 24th, and 2.66 on March the 3rd, and August the 8th, 2011, 2.41. The flash crash was 2.23. So second highest reading when you divide by VIX. I like this normalized indicator, something I want to further use maybe in trading system filtering, because we don't see, the VIX doesn't give you the complete story. I think the Zig Zag indicator gives you a better picture of how much day trade volatility is in the market. And then if the VIX is stealth, VIX is not indicative in my opinion, you can still normalizing it by dividing by the VIX to see how it compares to previous moves. So love this setup, love this research right here, and I wanted to share that with you. We'll have this indicator available to my subscribers. And if you're not a subscriber, you can get the indicator. I'll have another way for you to get the indicator separately through a subscription. And then we'll talk about how to implement that into our trading systems. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.